All right. Hey, good morning, everyone. Great to see you here. Hey, this one's for you, Michelle. Bit of a shout out. Michelle asked yesterday, can we have a bit of a chat about furnished and unfurnished properties? But maybe a bit more to it than that today. So we'll dive into it in a minute. But great to see all of you guys jumping on. Let me know. Give me a thumbs up or a shout out if you can hear me. I think I've got my tech back in order. It's taken a little bit to get the brain back into gear when it comes to the morning lives team, but good to see all of you guys jumping on while the live is warming up. Thumbs up, thanks Stephen. Quick shout out, Michelle, Nick, Bob, Shay Witten. Good morning, my love. Chris O, good to see you. Stephen. There we go. It's all good. Good to see you guys on. Hey, you listen, if you're new, if you're stumbling by, finding us by chance or by design, and you're wondering who I am, Jason Witten is my name. Been property investing over 20 years, coaching property investors across Australia and New Zealand, and many other places in the world, actually. We've got a lot of international customers on building their property portfolios. And each morning, get together with those people who are quite keen, mad property investors, maybe just like you, and we talk and have what we call a wealth coffee chat. Oh yeah, got the old... My kids bought me this coffee mug. Good on them. Each morning, we talk about property investing, about the idea of how to build, tweak, maintain, tune up our property portfolio, depending on your strategy and what you're trying to achieve, and hopefully keep it on track, because we've got some sayings around here. Those in the live stream this morning would know them. If you're a regular, buy well, never sell. The idea is you go to all this effort to purchase and own your real estate, and then people go and sell it, after, the wrong amount of time. Anyway, that's not what today's about. And also, this thing's a marathon, not a sprint. It takes time to create wealth in real estate. If you don't already know that, there's the first time I will remind you. And I will remind you if you hang out with me for as long as you're here. Because the longer you own good quality real estate, the wealthier you become. That is an absolute fait accompli, pending the whole world imploding. And anyway, if that's the case, we're all in it together. So who cares about that? Don't worry about things you can't control. But let's talk about increasing cash flow. Let's talk about increasing cash flow. This one's for Michelle, like I said, and all of you guys. Michelle just shouted it out the other day. Said, "Hey, listen, what about this? What? Maybe I can put some furniture in my property, and is that a good idea?" So let's talk about this. There's three versions of the world we're going to have a bit of a chat about today when it comes to increasing your cash flow. More money in your pocket is a good idea. Now, before we dive into this, there is a concept called highest and best use. Highest and best use. Maybe chuck it in the chat if you know what that means. Because for many of us in our portfolio, in the process, as we're traveling along in time and we go through these stages, and you guys have seen this before, acquisition, consolidation, lifestyle, we go through these stages of ownership and buying real estate. I'll put that as a bit better color. When we go through and we own our real estate, you might own a property. Now it's traveling along in this way, but the question is, often, once we've done the acquiring, right, this is when we want to buy our 4 to 6 investment properties. If we can make that work for you and your strategy, once we own these properties, let's say over here, by the time we've done our buying, we have 6 properties. The question we must always have at the top of our mind is, what is the highest and best use of the assets and the real estate I own. Highest and best use, okay? And we're like, well, what does that mean? Okay, let me give you an example on, the capital value, the highest and best use. You have a property and it is now 15 or 20 years old. Is that property maximum improved in its capital attributes? You know, the updated kitchen, up-to-date bathrooms, maximum amount of bedrooms, maximum coverage of the property and dwelling. You know, if you had a property and you had a 4-bedroom house and now it was 20 years old, well, maybe it's time to turn that into a 6-bedroom house and make it bigger and cover the land as much as possible, because a 6-bedroom house will earn you $200 or $300 more compared to a 4-bedroom house 20 years old. Highest and best use, okay? Highest and best use. So I'm not going to dive deep into the capital value version of that today. You know, maybe you've got a big piece of land and it's subdividable. You can put, you know, a dwelling on 2 sides. That's highest and best use. Maybe what Sam just did with one of his properties in Sydney. It was a 2-bedroom, quite a large 2-bedroom apartment, and he turned it into a 3-bedroom apartment internally, fixed it up, renovated it, and now that's the highest and best use of the asset that you own. Now, this is an internal concept. When we're looking outwards, we're looking acquiring something new. This is a look in on what you already own. Highest and best use, all right? Hopefully. Now, does that make sense? Let me know in the chat if I'm making sense about this highest and best use concept of the assets we already own. Because often we go looking out here, we're going looking everywhere else. Oh, I need to buy, get new. But often we need to have a little look at what we have as we go along. That is also, that highest and best use applies to your equity and your other stuff as well, team. Cash in a bank account. Is that the highest and best use of that cash in the bank account? No, it's friggin' lazy. But anyway, don't let me get distracted like a squirrel. Oh, look, there's nuts everywhere. Yeah, well, anyway, I'll move on. Thanks, Warren. Thanks, Michelle. Okay, so highest and best use. When it comes to the properties we own or potentially we're thinking about owning, how can we increase the cash flow? How can we increase the income that comes into our pocket on those properties? Okay, and there's 3 parts we're going to have a chat about today. What can we add? How can we manipulate the time we do things with? And can we multiply what that looks like in there? I'm just going to quickly chop this. Voila. So what does that mean? Let's have a look at what we can add. This one is inspired by Michelle's question yesterday. What can we add, team, in a property that we have already? What can we add to it and increase the furniture? Okay, so we can add furniture. Now, this is from a rental point of view. This is the simple. And then we can add rooms or building space, okay? Now, this rooms and building space become a bit more expensive, but we can talk about that as we go. Behavioral design, absolutely, Chriso. Like, boom. You can add bathrooms, you can bathtubs, you can breakfast bars, you can add barbecue areas, you can add a shed. You know, one of the big ones when we were doing stuff, 10, 15 years ago in some of the rural locations was, you'd add a $10,000 shed out the back for, for motorbikes and cars and a workshop, and that would get you another $150, $200 a week in rent. $10,000 for $150 extra in rent, boom, massive rental return, massive rental yield on that ad. What can we add? From simple, low dollars to high dollars as we go along. Solar, absolutely, Nick. And that's an awesome one at the moment. Adding solar, saying to the tenant, hey, listen, I've got solar in there so you don't have to pay for electricity or you work it out. And I'm gonna make, 20, 30, 40, $50 a week extra in my rent. Bob, back in the day, absolutely, a inexpensive carport, on the side of the house, extra money. And the furniture as we go. What type of furniture is pretty useful to add? For me, what's always been very useful to add, especially if you're in places where the renters are a bit transient, I always added the fridge and the washing machine and the dryer. That's what I always added when it came to some of these areas where I wanted to beef it up, because those were the big white goods that people don't want to travel around with. You think about students, you think about young professionals sharing a house, you think about those sorts of things. What are some of the simple things that people don't want to bring or they're not going to buy and own? A wine fridge, totally, Chris A. These are the things. So think about that as we go forward. What happens if we add some of these things? We're able to either, number one, be more competitive in the market if the market's a bit competitive. Hey, there's two houses side by side, one's for 400, one's for 410, but one's got a fridge, a washer and a dryer in it. I'm going to go with the 410. I don't have to bring any of that stuff, okay, etc. So hopefully you understand or appreciate this concept. Where now in your portfolio have you got assets that might need a little consideration of highest and best use, and put a budget together and think about what that might mean. One of the great benefits, tell me what one of the benefits are, a little extra cash flow benefit, team, on furniture when you put it in a property. All right, tell me what a knock-on effect, what a knock-on benefit might be if you furnish or add some extra fixtures and fittings in your real estate when it comes to your cash flow. Anyone know what that might be? Sometimes there's a bit of a delay in the live stream and you guys are typing furiously and fast. Boom, Stephen. Boom. Allison, on it. Warren, on it. Fantastic. Tax deductions, depreciation, Sean. Massive depreciation. You can have, maybe $5,000 to $10,000 worth of stuff and you can get very good depreciation on that as a tax benefit when it comes to furnishing. One of the little tips I give you is if you put together your furniture on a brand new property, then often you can bundle it into your finance if you know how to do that properly, okay? So there's a good one. I like that. I think it's absolutely fabulous. What is the highest and best use? Is your property under value, under renting because you don't have the bits in it, the barbecue area, the solar, the this, the that. And we got to think about this as property investors. Sometimes we come up a little roadblock and we're like, oh, I can't borrow to get another property. For the moment, that's okay. Turn back inwards to your portfolio and say, what can you do? Imagine you had 5 properties and you could add $100 worth of rental value to each of those properties. Then what? Maybe your servicing is up. Maybe then you can unlock your ability to borrow to buy that next piece of real estate, okay? And the depreciation is excellent. The payback is good. You can depreciate the full value of a piece of furniture in a very short period of time, 1, 2, 3 years, but the income value of those pieces continue for many, many years, okay? So that's where the upside is. Time. What's the time thing, okay? Often a regular lease is, 6 to 12 months, okay? Regular lease, every day, straight 180, 6 months to 12 months for most tenants, most agreements, okay? However, if you break away from that and you go anywhere from 3 months at a time, 1 month at a time, down to when it comes to short-term letting, okay, short-term letting, that can be quite good. I've got a property up in Brisbane, and for many years we did three-month leases and turned it over. There was like doctors coming from other places needed to stay somewhere for 3 months. There was professors for the uni. It was really well furnished and really well located, and that was excellent. Okay, down to 1 month, things like Airbnb, stays, those things, short-term letting can significantly, on the right property, if it's furnished, beef your income up very, very well. And at Positive Team, all of you guys in mentoring right now, we've got some super amazing, exciting opportunities this year in that space. Sam and the team have been working extremely hard to put together some awesome properties with some insane cash flow opportunities as well. So stay tuned on that one. Don't miss mentoring or you'll miss out as we go. So the short-term letting, you can do it yourself. We've got some clients who that's all they do now with their property portfolio, 7 or 8 properties. They short-term let them. Been a bit rough over COVID, of course, but it's certainly something you can do. Certainly, once you've done your acquiring, then it's fantastic to have 1 or 2 or 3 of your properties in this short-term cycle, because it can beef your income pretty significantly. And then you've got the rest of your income's kind of boring straighty 180 stuff. So the risk is not very high. There's some skill and some mindset around short-term that you've got to bust through. Some of the things you've got to check: are you allowed to do that in your neighborhood, in your council, in the building, in the area? There's a few legislation, ruly stuff that you need to check in on. But I love this. Short-term is fantastic. Just before COVID, I had a farm. I still got a farm. And I was renting out camping spots, 3 camping spots. I could rent this. I was renting out the grass short term. It was fantastic. Okay. So think about that. Where in your portfolio do you have potentially an opportunity where you could turn it into short-term letting? I know a number of people who are adding a dwelling, a little Airbnb dwelling at the back of their house, at the back of their property, and then short-term letting it, right? So then you can combine these as you go, okay? As you go. The last one, which is not my favorite. It's not my favorite. It's a bit cumbersome, but I know some people get some great results out of it. It's a bit more full-time, and it's multi-letting, okay? Which is room by room. Okay, room by room. If you had a 3 or a 4 or a 5 or a 6 bedroom place in the right area, you could let those rooms out by room, and it can significantly increase your income. Nothing wrong with that. If you combine the furniture and the room by room, it's pretty good. And a lot of places that works is, students and, those sorts of things. You got to be careful in this space. There's kind of boarding house rules. So certain sizes and again, some legislation, but I've seen that work extremely well for the person who has the right mentality and the right approach to this thing. One of the things that has, of late, NDIS, where you can have multiple tenants managed by a professional provider, which has worked quite nicely. We've got a few of our clients with the NDIS activity, which has gone well. But again, these things from here to here, think of it as I wouldn't say increasing the risk, but increasing the focus and the mental and emotional energy you need to manage the ups and downs of that opportunity when it comes to your investing. Morning, James. Chriso, yes, allowing pets. Yeah, absolutely. Pets can be a bump on it as well as we go along. So hopefully that makes sense, team. That was a good conversation this morning, because I think for all of us, we can have a little look at not only our acquisition plan, which is always on the radar, especially if you haven't bought the number of properties that you need just yet, but what is the highest and best use plan of the assets that you have? What is that plan? What do you have one? Maybe it's too early yet, but maybe it should be on your radar, okay, as you go. So there you go. Hey, Alison, yeah, listen, I think some furniture in your properties would work quite nicely. So yeah, you'll get a nice bump on that sort of stuff. Chat to the managers as well. So that's it, team. Wealth Coffee Chat done and dusted. Thanks for hanging out. As always, great to see all of you online. Away we go. Yes, my love there, Shay. We should be getting a furniture pack for sure. It's a nice way to go, bundle it all up into the property deal at the same time. All right, that's it, team. You guys be well, go forth, be merry, be great. Join me tomorrow at 8:10. We'll do another Wealth Coffee Chat for about 20 minutes, and hopefully share the wisdom, share the love. All right, be well, team. Take care. That's it for today. Bye-bye.